to Osaka. It's always a good excuse to come to Japan. It's great food. Today, I'm going to talk about stablecoin beyond payments and why stablecoins are transformative for not just payments, but for the global financial infrastructure as a whole. So just quickly, my background, I'm the CEO and founder of a company called Clearpool. We are a private credit on-chain marketplace, and we've done nearly $1 billion US worth of loans over the past 4 years. Currently, we mainly focus on sourcing liquidity for stablecoin-enabled fintechs with a big focus on payments. Myself, I lived and worked in quite a few different places: South America, Europe, Eastern Europe, Southeast Asia. I've actually been helping to build one of the largest fintechs in Southeast Asia. It's called Aspire. It's a digital bank for businesses. So I'm quite familiar with payment rails, and I know everything about the good sides and also the headaches of that system. Now, just quickly, background of stablecoins. Stablecoins originally, for the ones that haven't been around for a long time, were built to provide a stable pair for trading cryptocurrencies. For the OGs here, maybe they remember back in the days, BitMEX, you would actually trade with Bitcoin as the pair. Now, obviously, Bitcoin being very volatile and most people not thinking in Bitcoin prices, that wasn't a great user experience, so stablecoins solved for that. Now, meanwhile, payments to this day are actually still quite inefficient, right? So locally, especially in developed countries, we solved it. You have instant transactions, more or less. But once you pay internationally, it takes a couple of days, and it's still very inefficient. This is an example of a payment of a Brazilian supplier that pays in Brazilian real to its Chinese supplier in RMB. There is 4 intermediaries involved, and it's taking anywhere from 1 to 5 days, and you're being charged an arm and a leg. And now fintechs have come up and have been trying to solve this over the past couple of years, mainly via pre-funding. Like most of you probably know WISE. Pre-funding works like you keep capital in different local bank accounts with all the currency corridors that you're serving, and you receive the money locally and then you release it in the destination country. Now that works, has improved things, but it's still very inefficient. So today, we have 27 trillion that are locked up in different pre-funding accounts all over the world. Now, the big unlock for cross-border payments is really stablecoins. Why? Because they settle immediately. They don't really cost much anymore. For the new chain, it's basically zero. And you can send the money exactly where it is required. So if you make a transaction, you can simply send the stablecoins, and you can offer it locally. Now, that's been a big unlock, especially for cross-border payments. So, global stablecoin transactions are $6.3 trillion last year. They're growing at 150% year on year. And the biggest unlock, and the main thing is this is actually not coming anymore from trading cryptocurrencies. The big growth is coming from emerging markets that are actually using stablecoins as a means to store value. So a lot of them also, there's a positive correlation between inflation in different countries with weak currencies such as Turkey and Argentina, and a stablecoin adoption, but also as a means to conduct global payments. Stablecoin really found their product market fit. Other use cases for stablecoins is to basically enable instant settlements wherever you still have a delayed bank settlement lag. I think the most prominent example is probably card payments. Once again, you make a card payment, there's 5 intermediaries, it costs 2 to 4%, and it takes 3 days for the money to actually arrive. Anything related to on and off ramping as well. You can use stablecoin to facilitate instant transactions. So stablecoins are really a game changer, mainly because they settle immediately, they're much cheaper, and they're programmable. So any compliance, KYC, AML checks, etc., can be obviously programmed directly into the stablecoins. And until now, there was still a little bit of hesitations from a lot of players to get involved, mainly concerning regulations. Okay, can we trust those stablecoins? We have seen very, very big progress lately with the Genius Act and also a regulatory clarity in Europe and in Hong Kong. And basically now it is very clear in those markets who can issue stablecoins and what those stablecoins have to be backed with. So the big boys are now coming in. So especially fintechs, PayPal has their own stablecoin, Stripe has an internal stablecoin, actually building out a payment chain as well. You have all the different banks getting involved. You even have Amazon and Walmart that are considering launching their own stablecoin. Because we also, I think most of you know that operating a stablecoin business is extremely lucrative because you're earning the yield from short-term deposits. So Tether is the most profitable company in the world. What we're seeing now is stablecoins being adopted more and more in general business transactions, and as a result, we see additional currencies coming on chain, and we also see additional assets coming on chain. So far, stablecoins have really been a US dollar phenomenon. It's like 99% of stablecoins are still US dollar stablecoins, but we're now seeing additional currencies coming on chain because a Japanese merchant obviously still needs to transact and operate in Japanese yen. So, right now, stablecoins are really being used as a way to connect and improve existing payment rails. But there's still always the fiat leg involved. The big unlock is actually coming once everyone realizes that you can stay on stablecoin rails. And once everyone realizes that, and once people are comfortable to stay on stablecoin rails, you have different currencies in stablecoins, you have all the different assets in stablecoins. That's where the big unlock happens, because that's when we can really bypass the current inefficient banking stack when it comes to payments. And this is really, how to summarize how stablecoins are being transforming. So first, it was all about trading. Then it was a store of value for the ones that didn't have access to the US dollar. Now we're talking about payments, programmable money, and then the big unlock is really once we don't just have the dollar on chain, but once you have the dollar on chain is a bit like a Trojan horse. Once you have the dollar on chain, you want to earn yield, you want to buy stocks, you want to buy different assets. The vision here is really that, the blockchain is just one universal ledger, and currently we have a different ledger, different accounting system for cash, for stocks and bonds, for real estate. The big unlock is remove all of those assets onto the same chain, and it's going to be a lot more efficient, but we can also do a lot of things with these assets. Now all those things that we built with DeFi, where so far we've just been using cryptocurrencies, all of those things can also be utilized with actual real-world assets, and stablecoin is the big game changer there. I call it DeFi 2.0. So, I just mentioned stablecoins are really the foundation, right, of this new operating system that we at Clearpool believe we are moving towards. I kind of see it like the big equalizer, because the parties that are benefiting the most from that are emerging markets where payment rails are bad, are small merchants that now have lower transaction fees. It is actually very, very meaningful for a small merchant to improve their margins by 2 to 3%, which are currently the fees incurred by accepting card payments. And for everyone else here who is just like, I would say, a regular person living their life, I think things are going to get a lot better, a lot more efficient. It's going to be easier to move your assets compared to what it is right now. But I also don't think things are going to drastically change. It's going to be a slow transition towards a better infrastructure. And with all the large tech players involved, most people are not even going to realize that they're actually transacting on the blockchain. And probably in a few years, we're not really going to talk much about stablecoins because stablecoins are just going to be the backbone of our financial infrastructure. It's going to be a little bit like, the internet and data. It's here, but nobody really wonders where it's coming from. People are just annoyed if it's not working properly. Thank you very much.
Yeah.